is drying up and states are bracing for steep water cuts in the near future.
You may have heard about the alfalfa farm in western Arizona, run by a Saudi Arabian company.
I have never seen anything this egregious by state government in my life.
Right now, the company is allowed to pump tons of groundwater to grow feed for cattle.
And now we have all these different companies coming in, foreign companies coming in and depleting our natural resource.
And there's no bigger problem facing us in our future here in the desert than water. And we're supposed to have reached a collective agreement on how to use less water from an ever-shrinking river.
People look at it as a temporary situation. This is not a temporary situation. This might be our new future.
America is running out of water. A 23-year-long so-called super drought is the worst thing that the American West has experienced in the last 1,200 years, according to a recent study published by the Department of the Interior.
The drought that we are in, we have not seen in our lifetimes because it hasn't happened this deep since about 1,200 years ago, and it is projected to continue to worsen and go on for at least another year, maybe even more.
The Colorado River, a waterway which supplies homes, businesses, and millions of acres of farmland, is running dry, which could threaten the entire country.
We're gonna die! Right?
Right.
Water has become a precious resource, so why the f are we selling it to hedge funds in New York and dairy companies in Saudi Arabia? In every crisis lies great opportunity, and market speculators are capitalizing on the scarcity of water to generate profits by using complex financial instruments and shady backroom deals to hold a vital resource to ransom. I know this sounds like a crazy conspiracy theory, so let's start right away at the very beginning and learn how people in suits in New York are making money off alfalfa farmers in Colorado. Big farms and businesses do not get water from municipal water supplies because it is too expensive, and for some applications, they don't want it to be treated with the chemicals that most tap water has to keep it safe to drink. A lot of big farms are also so remote that they simply do not have a connection to municipal supplies, so these businesses opt to pump their own water directly out of lakes, rivers, or underground aquifers. But if farms have to pump their own water from communal supplies, there is no reason for them to stop pumping. The more water they collect themselves, the less will be left over for their competitors to use on their crops. To make sure that this doesn't become a Mad Max-style free-for-all of farms pumping as much water as they can to put their downstream competitors out of business, the states along the Colorado River all issue water rights.
And what you're trying to do is give everybody a chance at water.
Water rights are like a coupon to pump an acre-foot of water. An acre-foot is how much water would fit in a box that is 1 foot high and 1 acre across. Farmers use acre-feet because there is so much water involved that gallons or liters would just get confusing. Every state has different laws for allocating these water rights coupons, but Colorado, which believe it or not is the starting point of the Colorado River, has, according to their own Department of Natural Resources website, a unique system when compared to the other parts of the United States. Colorado uses a prior appropriation system, which means that whoever used the water first gets to keep using it. The law was first introduced way back in 1872, when the state's lawmakers first noticed that the river could actually run out of water, so something had to be done to make sure that everybody got their fair share.
19th century laws and 21st century obligations and expectations.
If that water's not available, the economic chaos that would be caused would be tremendous.
The law worked for farmers and businesses, proving that if they had put some amount of water to a beneficial use, they were then allowed to keep using that much water every year. If farms stop using the water for a beneficial use for a period of 10 years or more, their water rights are abandoned and can be picked up by the next farmer in line that wants to use water for their crops. Farmers with water rights get audited every decade by an engineer who presents cases to a water court of all the farms they suspect have abandoned their water rights. It's then the farmer's job to prove that they did not intend to abandon their rights. If they can't prove this in court, their rights are given to the next farm or business in line on the waiting list. Farmers obviously don't want to lose their water rights, because without water, they can't grow anything. So to make sure that they can always prove that they are putting their full extent of water rights to a beneficial use, they grow very water-intensive crops like alfalfa and almonds. The use it or lose it business model has worked hand in hand with record-setting droughts and greedy speculators to give us empty lakes and dwindling reserves of something that we all need to survive.
So if our water crisis grows more intense, we could potentially use the water from this valley, and that makes the water very expensive.
So it's time to learn how money works to find out how companies are making record profits by literally sucking the country dry. This week's lesson was sponsored by Blinkist. Blinkist is an app that provides you with the most important ideas of over 5,500 nonfiction books and podcasts, allowing readers to grasp the key ideas in just 15 minutes. Whenever someone recommends an important nonfiction book to me, I feel guilty, because I know they spend more time reading than I do. It's not because I don't like reading, it's because I want to make sure I'm spending my reading time efficiently. With Blinkist, I find many titles of my interest and learn about them when I have time, and if it turns out I have real interest, then I read the whole book. I recently listened to the key points of an inspiring book on Blinkist called The Adaptation Advantage, which provides actionable insights on how to succeed by utilizing human skills like adaptation. Since using Blinkist, I feel like I'm spending my time much more efficiently, because I'm able to get the key ideas before I decide to sit down and read a book. Blinkist Connect now allows one premium subscription to be shared between 2 accounts, so users can share the app with a family member or a friend at no extra cost. Blinkist's tailored content is designed to help users improve in various aspects of life, such as parenting, communication, and teamwork, making it an ideal tool to guide personal growth in the year 2023. Get 25% off Blinkist Premium and enjoy 2 memberships for the price of 1. Start your 7-day free trial by going to Blinkist.com/howmoneyworks. Companies are making money off record droughts by employing 3 different strategies. The first strategy is buying up existing farms that already have water rights and then making them more water efficient by paying to upgrade irrigation systems or planting less water-intensive crops. The companies then profit by renting out leftover water rights to farmers that don't have any and towns that need the water for their municipal supplies. This actually sounds like a good system, because it encourages all of the companies with water rights to use their water as efficiently as possible to maximize profit. Companies like the New York-based Water Asset Management talk about their sustainability efforts on their website. The company currently manages $450 million in assets raised from investment funds and high net worth individuals who are looking for an alternative investment vehicle. The problems start when you understand how these water rights really work. Water rights in Colorado are an asset that can be bought, sold, or rented, completely separated from the farmland that uses it. But most investors keep the farm so they can pull a clever trick. Water rights work on a hierarchy, with the very first businesses that claimed them way back in 1872 getting priority use of the water, and the most recent businesses to claim them getting the lowest priority. If there is lots of water flowing down the river, then everybody's rights get filled. And some new farmers might even be able to apply for new rights if they can prove that they could put that excess water to good use. To the people that own the highest priority water rights, this is actually far from the ideal. If water is plentiful, then farmers can apply for their own new water rights, making existing water rights worthless. Farmers also don't want to rent the rights to use the water, because they can apply for new water rights and harvest it for free. The reason that hedge funds have become interested in water rights is because the opposite of this is happening. The current drought means that fewer water rights are getting filled, and only the businesses with the very oldest and highest priority rights get to pump water for free. Everyone else needs to stop farming or get the rights to use the water off investors that have invested into the high priority rights.
And they can use as much water as they want, as much groundwater as they want. Do we know how much they're using?
We don't know how much they're using.
High priority rights to use water are currently trading in the very opaque secondary markets for around $60,000 per acre foot. The average farm in Colorado uses about 1.5 acre feet of water per acre of farmland every year. The 2017 Consensus of Agriculture, conducted by the USDA, reported that the average commercial farm in Colorado was 820 acres. That means that the average farmer would need to pay $73,800,000 to buy enough high-priority water rights to tend to their crops. Since most farms make less than $5 million a year in top-line revenue, this just simply doesn't work. That means that farmers have to rent the water. This works by the rights holders telling the water authorities that a farm will use some of the water they are entitled to in exchange for a fee. Depending on the location, an acre-foot of water per year rents out for $500 to $1,500. The cash flow on renting out water rights is therefore between 0.5% and 2.5%. To the investors, this would be like buying a $60,000 condo and then only renting it out for $1,500 a year. It's not a great return, so there has to be another reason why they are doing it. The real opportunity lies in the capital appreciation of water rights, as less water flows down the river and less water rights get filled. This means only the oldest and highest priority rights holders get to pump water, and they can charge more to rent the water or can sell their rights at an even higher price to the next speculator. Investment funds like Water Asset Management exist because wealthy investors want to capitalize on climate change by speculating on a dwindling resource. A quote from the company's website: WAM's core belief is that scarce clean water is the resource defining this century, much like plentiful oil defined the last. They are probably right, and they have already made their investors lots of money, but it does feel just a little bit wrong that something so vital to life is being used for speculation. The reason that a lot of these companies keep the farms at all is so that if they can't rent out their water rights, they can just use the excess water on their own farms so that the high priority water rights don't get taken away from them through the abandonment process. For other states, water rights are a riskier investment with higher potential returns. If the water levels in Lake Mead and Lake Powell get too low, they will turn into dead pools. Not the R-rated superheroes, but lakes that are not high enough to flow through the dams that hold them back. If this happens, no water will flow downstream at all, and even the highest priority water rights will not get filled. Investing into superior water rights downstream from these dams is a gamble that water will get scarce, but not so scarce that it can't pass through these two lakes. The second way that companies are making money off record droughts is by getting preferential access to alternative water supplies to run their farms. To see this strategy, we need to move downstream a bit to Arizona, which is depleting what is left of its precious underground water as rivers start to run dry. Companies have been able to work out close deals with the Arizona State Land Department to pump water for suspiciously low prices. This scandal included a company by the name of Fondamonte, which is an American subsidiary of the Saudi Arabian dairy company Almaray. Fondamonte was leased 3,500 acres of farmland by the State Land Department for a rate that could be as low as 1/6 of market price, according to a report published by the New York Times. This was already big news, but it revealed to outsiders something even more shocking. Unlike Colorado, Arizona doesn't have restrictions on groundwater use, so rich companies like Fondamonte can drill down deeper than anybody else and access unlimited water. Arizona is very hot and dry, and if the Colorado River stops reliably supplying it water, it's going to need that groundwater to make sure it still comes out of the taps in people's homes.
This is a human issue.
A legal failing is allowing big companies to pump unlimited amounts of this vital backup water supply to irrigate alfalfa in the middle of the desert, a crop that uses more water than almost any other alternative. Fondamonte wasn't even selling the alfalfa to grocery stores or restaurants. It was shipping it 8,000 miles back to Saudi Arabia to feed dairy cows to make milk, yogurt, and cheese to sell in the Middle East. Since the farmland was so cheap and the water was limitless, it was cheaper to make feedstock in Arizona and ship it all the way across the world to another desert than it was to let their cows graze like normal dairy farms.
Without any regulation, they can just pump until the aquifer goes dry.
The Saudi scandal got a lot of attention, but the problem won't go away while access to groundwater is a free-for-all. The third way that companies are making money off record droughts is by lobbying for government bailouts. Congress just recently allotted $4 billion for drought relief in western states, and a portion of that money will be used to pay farmers to not farm anything. If farmers don't grow crops, they won't need water, which will hopefully restore water levels. It will also reduce food supplies, but that means more money for the farms that get to keep using water. The real solution is to stop businesses being so wasteful with water. This includes more than just farmers, although they are the biggest perpetrators because they insist on growing such water-intensive crops. The farmers are saying that the only reason they grow water-intensive crops is to maintain compliance with their state's use it or lose it water rights policies. State legislators are saying that the only reason they don't change the law is because they receive so much pushback from special interest groups who have a lot of money riding on water rights. Special interest groups will say that water rights have been done this way since the 1800s, and any government attempt to change policies now will only cause more water usage and hurt farmers and businesses. There is a lot of blame, but as is often the case with these situations, money is making it very hard for any progress to be made. In early 2022, a law was proposed in Arizona to allow rural communities to opt into groundwater enforcement. The law would allow communities to set up their own limits on groundwater usage, which would likely make wasteful crops like alfalfa unviable. This would encourage more sustainable farming practices, and the law wouldn't even force any communities to opt in, but those that did would benefit from having a sustainable future. The plan was lobbied against by special interest groups that like the market opportunities that scarcity has created for their benefactors. This whole investment scheme is surprisingly similar to the subprime mortgage market that caused the global financial crisis. To find out how water rights and home loans are basically the same thing to investors, go and watch this video on how the Big Short actually worked. A special thanks again to Blinkist for making it possible for everybody to keep on learning how money works.
That means I get to take the water. Right? It's very important because someday water is going to be more precious than gold and people are going to kill each other to try to get that.